On behalf of the Board of Directors of the World Affairs Forum, I welcome you to today's conversation, Building Trust in a New World, with Greg Medcraft of the Organization for Economic Cooperation and Development. My name is Wendy Scratt. A lot of you know me. I'm the Executive Director of the World Affairs Forum. The Forum, of course, is a Connecticut-based nonprofit organization. We bring you a diverse selection of global leaders, policy experts, and leading journalists, and create conversations around their insights on important global issues and strategic U.S. relationships around the world. As usual, I want to thank our generous sponsors, Genry Corp, McCarter and English, First County Bank, Alliance Bernstein, Stanford Health, and the Prince Law Group. Their support, along with your membership, makes our programming possible. I want to thank each of you that are attending today. The pandemic still requires all virtual programming, and our events now require membership or a purchase ticket. I thank each of you for supporting this new model as it's required to sustain our organization. We will be recording this event. Our next email to you will include the link, and we encourage you to share it as you like. Today's program will start with 20 to 30 minutes from our speaker, and then we'll open the conversation for Q&A for the remainder of the program. You can submit your questions for Mr. Medcraft at any time in the Q&A or the chat. Frank Bria, our co-chair of our program committee, will be managing those questions for us today. And with that, I will pass the mic to our forum board member and other program co-chair, Thomas Krantz, who will be introducing Mr. Medcraft.
Thank you, Wendy. Thank you, Greg. We reached out to OECD in today's world. There's a new government in the US. The OECD has been coordinating social and economic affairs amongst its member countries for, well, since the late 1940s. We thought it would be a good way to catch back up on what OECD is doing in the hope that we can grow more quickly, build back more quickly, as one says in Washington, by using our strong existing establishments and well-experienced, familiar procedures of coordinating with our allies. Greg is Director for Financial and Enterprise Affairs. It is the standard setting and policy work or part of OECD on such subjects as corporate governance, anti-corruption, business conduct, competition, capital markets, pensions, insurance, public debt, and even blockchain. It is a very, very broad mandate for the world's economy. Greg began his work as an auditor. He was a banker at Societe Generale. He was then chairman of the Australian ASIC, the Securities Commission that would be familiar to us in US jargon as Australia's SEC. Sorry, Greg. He was then chairman of IOSCO's technical committee. IOSCO is the organization for all the world's SECs, so to speak, and the technical committee does the public policy coordination. So he's used to knocking heads and getting something positive out of those sore heads. And he moved on to OECD to assume his current responsibilities about 3 years ago. Thank you very much for joining us, Greg.
Thank you, Tom, and thank you, Wendy, and thank World Affairs for having me. And good afternoon, everyone, and thanks for joining us, actually, or wherever you are in the world. So it's a pleasure to join. And today, I'm going to start off with perhaps a little bit of background on the OECD and on the specific activities of my directorate, which is the largest of the OECD, which is for Financial and Enterprise Affairs, which actually really houses our work, policy work on markets and business policy. And I'll detail really, as shown on this slide, 3 things. One is the OECD mission and activities and context. And then secondly, going one step down, the Financial Enterprise Affairs Division and our Directorate and what we aim to do. And then thirdly, some of the key priorities in this work over the next few years, which obviously are pretty important, I think, for the world. So I'll keep this overview at a fairly high level, and I'll give us space to delve into details in the discussion later on. So first of all, an overview of the organization. The OECD was established in 1961 as a successor to the post-war Marshall Plan. In fact, our building I work in is called the Marshall Building. And its actual goal was to build and support a rules-based system of global governance. And I think it's really relevant as much today as it was then, based on democracy, rule of law, open and transparent markets, human rights, responsible business conduct, and a shared goal of sustainable development. And the OECD's mission is very simple. It's actually not necessarily about better policies for better government. It's actually about better policies for better lives. And it's grounded completely in, again, those foundational values that I mentioned. Today, we have 37 member countries made up of advanced and middle income democracies in North and South America, Europe, and Asia Pacific. And this sort of defines what our real footprint is, because it's a lot larger. We actually work with 140 countries worldwide, collecting economic and social data and assisting countries in basically implementing OECD global policy standards. In fact, the committees that we have often can represent 140 countries rather than just the members. So the OECD countries themselves make up about 50% of the global GDP in purchasing power parities, and have a combined population of around 1.3 billion. We have 3,700 staff working on every policy issue outside of national security, and our 18 major policy directorates or sub-agencies cover areas from tax to development, from environmental issues to science and technology, education, trade, agriculture, health, social policy, and energy. That's just to name a few. I think it's this multidisciplinary view that actually is one of our major strengths. It really allows us to connect the dots. And we deliver on that mission I mentioned a minute ago, really through 5 core activities. It's really what we do in various degrees across the OECD. The first is that we provide leading research and analysis as one of the world's largest and most trusted sources of comparable statistics and data and policy analysis. We publish over 5 billion data points each year. Secondly, is setting policy standards and monitoring implementation, or what we call policy standards, or our instruments, which again, they're built on evidence base and they're standards that are actually really adopted by our member and non-member countries. Thirdly, is providing capacity building and technical assistance to OECD and non-OECD countries to benchmark their performance, to actually help them maybe move towards adopting our policy standards and best practices. The fourth thing we do is convening stakeholders, bringing people together, countries together to discuss areas of common concern. So we are very much a forum for cooperation and collaboration, and because of so many challenges today, you can only do it by really coming together in a forum, just like we are today. And fifthly is really, most importantly, is developing partnerships, connecting the dots across the world with the private sector, with governments, and other international organizations like the IMF, the World Bank, etc., to make sure that the efforts are mutually reinforcing and we try and minimize duplication and support one another. So with this high level context, let me just move into the specific focus of the Directorate for Financial and Enterprise Affairs. Our mission as an extension of the OECD's is to assist policymakers in fostering fair and efficient markets, which contribute to inclusive growth and in turn better lives. And my directorate covers, as was mentioned by Tom, 6 areas of policy work across 2 clusters. So as you can see on this chart, so our markets cluster, we have work in financial markets and consumer finance, including financial market functioning, insurance, pensions, financial consumer protection and literacy. And here we have involved with market regulators, pension regulators, treasury officials, central banks. We actually have involvement in our committees of a very broad community. Secondly is competition policy, where it's obvious we work together with the world's competition regulators and policymakers. And then thirdly is international investment and capital flows, which is quite important. We work a lot with again, treasuries and etc. In business conduct, we really have three parts. One is corporate governance. Secondly is anti-corruption and bribery. And often that's where we're working with a lot of justice departments around the world. And then thirdly is responsible business conduct in supply chain. So particularly stress on human rights is a major issue in supply chains. So if we move on to, these areas of work, it's largely, set out in treaties or conventions or standards or recommendations that really set out sort of, as I say, that often the commitment that countries have to really like-mindedness and having a common approach to solve problems. So, and in the directorate, it really is about, making sure that the rules of the game are fair in global commerce and investment. And again, it is a key part of what we do. Our member and non-member policy committees, they do not only set the standards, but also they monitor the global rules so that in their countries, companies do compete, hopefully, but the aim is to compete on a level playing field internationally. Policy standards ensure that companies face a more fairer, open market when they compete on economic value, where they don't put in place discriminatory practices at home or abroad, or they, put at a competitive disadvantage, in fact, if they're doing the right thing and others not doing the right thing. So it is very much about a level playing field. And the title of today's event is Building Trust in a New World. Well, when confidence in institutions is shaken by a pandemic coming on top of decades of uneven growth in an era where international cooperation is viewed with suspicion and globalization met with outright hostility, I think we're all starting to realize that the kind of rules-based governance system, shared values, democracy, rule of law, human rights, are very important, I think, foundation of winning back trust around the world. So, and we've actually got countless examples of working towards that goal. And I'll just illustrate three short examples. Firstly, on anti-corruption. Secondly, on international investment. And three, on corporate governance. So, on anti-corruption, the OECD Convention on Combating Bribery of Foreign Public Officials in International Business was established in 1977 and is our primary international policy instrument, we'll call it that, for really dealing with foreign bribery. And the convention is legally binding on the signatory countries, whereby, for example, they all agree that bribery of a foreign public official in international business transactions is a criminal offence, because in some countries it's a misdemeanor or a civil offence. Pretty important. So it's actually the first and only international anti-corruption instrument focused on the supply side of bribery. And in particular, it's a very important one for the United States. The US introduced criminal sanctions for US companies bribing foreign officials in 1977 under the Foreign Corrupt Practices Act. But concerns were raised that this would actually give non-US companies an unfair advantage in foreign markets. So what the United States did was work with the OECD as an international body to look to internationalize those US norms and to drive adoption and implementation in these basically all major economies. So, and the US government obviously has benefited enormously from trying to really create this level playing field. So, in fact, the US Treasury since '97 enforcement actions by the US under the convention, sometimes in coordination with other signatories, has yielded at least $7 billion in monetary sanctions. But also, most importantly, it has created a much more level playing field. But again, it's a work in progress. Second, on international investment, and here I'll mention OECD, what we call the codes of liberalisation of capital movement. This is about the free flow of capital around the world. That's what this treaty is about, and signed by all the member countries. And it's again a binding agreement on the signatories of that instrument. But again, if you think about it, it's pretty damn important that capital can flow freely around the world to the best place to use it. So under the treaty, countries are required to maintain an open and transparent regime for foreign investment. And basically, they're encouraged to progressively abolish borders or barriers to international investment in their countries. And reforms under the codes have greatly, or these codes have greatly diminished protectionism and inefficient practices and open up opportunities for investors across, again, signatory countries. And they're a very core part of anybody wanting to join the OECD. And the codes have established rules that prevent countries from imposing unjustified protectionist measures, such as abusing capital controls to target exchange rate levels that create undue trade advantages. Importantly, the codes do drive harmonisation of the business environment, and non-discrimination is a fundamental part of the instrument. And any advantage extended to one adherent must be extended to all of them. So it is that mutuality. And remember, these are rules that are applied to economies making up fully half of all global economic activity. So the third thing is to highlight the G20 OECD principles of corporate governance, which are an international benchmark of corporate governance. The principles are essentially a codification of best practice to help policymakers evaluate and improve the legal and regulatory and institutional framework for corporate governance. And our corporate governance community or committee is actually made up of market regulators and also with treasuries. So it is the people who are concerned with this. But also they provide guidance for stock exchanges, investors, corporations, and others who have a role in the process of developing good corporate governance. These are not just for policymakers. A lot of our standards are actually for business that can actually use them as a guide. The principles in this case are non-binding. So unlike other instruments I've mentioned, implementation and enforcement does not require embodiment in national law and regulations, but clearly it's fairly persuasive through mechanisms like peer reviews. However, they are a beacon in the world where significant public equity markets are growing fast in emerging economies in Asia, and where an increasing portion of savings are flowing into companies in other jurisdictions, including a big factor in the market these days are majority state-owned enterprises is a big area where there's a lot of corporate governance concerns. And this matters to US investors because the US is the world's largest owner of companies listed abroad and accounts for almost a third of total cross-market equity investments globally. So, you know, having closer adherence to these corporate governance principles in foreign markets is one of the best tools we have to ensure good stewardship in these investments and protection of shareholders' rights abroad. And ultimately, ensuring that investors have trust and confidence when they're investing. So implementing standards like this, benchmarking countries against their commitments contained within them, and building capacity to bring countries closer to adherence is really the bread and butter of our work. So it's not just about signing up, it's about making sure that you actually do what you've committed to do as a government. But we also help governments anticipate and respond to new challenges. Like, I'd like to finish probably a little bit about those new challenges by highlighting 3 areas which I'm sure you'll all find interesting and are very topical, is sustainable finance, digitalization, and trust in business. And if we look firstly at sustainable finance, I think we all recognize the growing expectation on business and the financial industry to better align the activities with long-term sustainable value, and the need to better incorporate these considerations to frankly stay competitive. And that's what sparked Larry Fink's letter to CEOs this year, urging companies to set net zero carbon transmission targets, and a growing consortium of asset managers who have pledged their entire portfolios, currently over 9 trillion of assets, will be net zero emissions by 2050. And the industry, as we know, has coalesced around management of environmental, social and governance risk factors, or ESG, to measure and manage sustainability risk. But our analysis has revealed just how weak ESG practices are as a tool for sustainability risk management broadly, and managing risks like carbon emission exposures. Essentially, the frameworks for measuring and disclosing ESG risks, whether they be from rating providers rating the company in terms of its ESG, or institutional investors or index fund providers, are so varied and so opaque that it's extremely difficult to get an accurate picture of material non-financial risks, or to assess, again, the performance of companies in mitigating them. So investors thus really, they don't have good tools to assess, compare performance on ESG risks, to price those risks correctly in the market, and therefore to direct capital accordingly. So we can't really expect the financial sector to make a strong contribution to the wider sustainability agenda, or to Thomas's comment earlier about building back better in the COVID-19 recovery, unless you've got the right data and the right accurate data. So the OECD's aim is in this space is to drive a globally mandated, auditable ESG data reporting framework. So again, if you can't measure it, you can't manage it. So to really drive better transparency and standardization at the core elements of ESG risk disclosure. And it's here I see OECD leveraging the data capabilities that we have, not only to inform the metrics, but perhaps to be a global data repository for ESG data, to ensure the quality of the data, and also to make it accessible to whoever wants the data. Secondly, on digitalization, which again is a huge agenda across all countries and clearly across OECD. Our focus here is on the impact of emerging technologies and digital market dynamics on government's policy goals. So we're looking closely, as mentioned by a little bit before, we're looking closely at blockchain, but we're also looking at artificial intelligence to equip governments with the knowledge and data they need to understand these technologies, the challenges, but also the policy tools to respond. And our analysis has, across this, explored a lot of different issues, from digitalization of assets in financial markets, to taxation of cryptocurrencies, to the use of blockchain in supply chains, due diligence, or in healthcare. And this year, our annual flagship publication, the Business and Finance Outlook, will be on AI and business. And we are monitoring developments and challenges in digital markets, which are different to traditional markets, in that they tend towards a winner-take-all dynamic. We have concept of killer acquisition, so you can just become larger and dominate, and the extent to which digitalization is contributing to rising firm concentration. And whether this is a bad thing, it's actually, frankly, still a matter of active economic debate amongst competition regulators. So we are looking closely at the impact on competition with flow-on effects. Does it actually inhibit innovation and productivity, consumer well-being, and traditional tools, whether the actual traditional competition consumer protection tools are actually up to scratch. For example, the extent, whether our current understanding of harm to consumers, which is a current tenet of competition policy, does it really incorporate the true value of personal data and privacy? Because we know, at the moment, we don't really price personal data and privacy. It's a zero price product. So third and finally, on trust in business, which is specific, a very specific OECD initiative in the directorate, and actually helps drive better implementation of business conduct policy standards, which I mentioned before, are often based on the commitment of countries, the signatory of countries. But they're not just policy advice. This is something that can be adopted by companies themselves. So this initiative is interesting because what we've done is built a network of 40 multinationals committed to championing themselves the OECD policy standards and contributing to specific implementation programs. So, for example, we have a project that's called Compliance Without Borders program, which seconds compliance officers from high-performing companies to state-owned enterprises, perhaps in middle-income or lower-income countries that have state-owned enterprises, because state-owned enterprises are often a big issue with corruption, to actually try and build a compliance activity. So allowing this to happen between, between markets, and it's working quite well. And I'm sure the audience is well aware of the shifting global paradigm where countries are differentiating themselves. They're competing, as I say, for global influence, less on the basis of how their economies are arranged, but as I said before, based on the values that underpin their economies and society. So this is what we think, this is a very good program. So multinationals are really a country's most visible ambassadors, and driving greater trust in business is an important means of projecting those values. And in fact, our Trust in Business initiative, we're currently working with the State Department right now to develop a framework to quantify infrastructure projects around the world called the Blue Dot Network, which is actually looking at projects to see where they really encompass what the principles, what we call quality infrastructure. And beyond this, we know there are numerous quantitative studies, including those from the OECD, that things like responsible business conduct and the trust that it actually engenders make up actually a significant part of long-term value, business resilience, and competitiveness. That is to say, simply trust is simply good for business. So, and it's been quantified, and hopefully it makes common sense. So, ladies and gentlemen, this has just been a very brief interview. As you can see in the slide, there's lots online, but and plenty more issues to discuss. But I hope it's provided you with a sound basis for discussion. Thank you.
Well, Greg, thank you very much for that wonderful overview. One quick question regarding the OECD that I think, just for the audience, since it's relatively new for many here, how is it funded? And is it an expanding membership or is it fixed in time?
Yeah, sure. So currently our funding is around roughly about 400 million euro. About 200 million comes from member countries, and the other 200 million comes from what we call voluntary contribution. So these are programs that countries ask us to undertake. And the largest contributor is the European Union, then followed by, I think, Japan. The US is in there as well. So this is where countries will ask us to look at anti-corruption. The US is asking us to look at anti-corruption policies at the moment. A lot of it is capacity building in non-member countries to build, the values. The number of countries at the moment it's 38, and it has grown very fast. We've just admitted Costa Rica, Colombia, and there's a list of about 6 or 7 other countries that have been considered, including Brazil, Argentina, Thailand is there. So, if you think about it, the key is to be relevant. So the world is changing, and but equally, we don't want the standards to drop. So you have to get in. It will give you time, but you have to really. We're not going to lower us. It's critical. Those fundamentals that I talked about, which is the issue of democracy, rule of law, human rights, and sustainable development. That's the bedrock of the OECD, and I guess it was set up with US values, right?
And this is something that I had an opportunity to work on early in my career, anti-corruption. And I know you guys have been leaders around the world in terms of developing policy around it, but how is it enforced both for members and partners? Can you elaborate a little bit on the enforcement mechanism or the influence you have?
I can sort of comment from my own experience as a former
Yes.
enforcement agency. because obviously I prosecuted corruption in my own country. And corruption is very hard to prosecute, I can assure you, especially foreign corruption. So there's two things. One is at the committee, it's generally represented by justice ministries, like in the United States. And one of the things we do for signatories that are signatories, we do peer reviews of countries to see how they're going and whether they're actually, what have they actually successfully prosecuted foreign bribery offences. But also what we do is we do a team actually monitors corruption cases around the world, and one of the most controversial things we do at each meeting is a tour de table to actually say, well, hold on, what's going on there? We've seen there's a problem. What are you doing about it? So there's nothing like peer pressure at times to make a difference, right? The other thing we do is we actually have a heads of law enforcement meeting that come together, which is, the real like law enforcement. And I must say it's something where I first became aware of the OECD. So again, it's about bringing people together, and especially these days with, multinational corruption cases, it works I've seen it myself working firsthand, where one agency will say, well, you go first and we'll go second, and we work together. So it does actually work. I mean, it's still a lot to do in the area of multinational corruption, but it's and as you know, the cost to the world of corruption is still, I think it's 5% of global GDP. So it's an enormous problem. And with COVID, it's only increased, is the anecdotal evidence.
And then the other related question to that is, how does this business trust network that you've established, is it really designed, because I know multinationals have a huge role to play in terms of limiting anti-corruption and having vigilant compliance. Is that what the business trust network is focused on, or does it have a more expansive role than that? I mean, it would be great to get a sense of some of the issues this trust network has and what groups are part of it.
Well, we have, for example, Walmart is a member, for example, and we have energy companies, we have retail companies, so we have construction companies, we have a lot of Americans and Europeans, so in the network. So if you think about, and it's not just about corruption, it is about often responsible business conduct. It's actually about doing the right thing. It's about, and the biggest risk, to business these days is reputation risk, right? They don't want to have human rights issues in the supply chain, because suddenly not only will somebody not want to work for them or want to buy their products, but they might end up dumping their stock. So companies are pretty sensitive to risk management, especially multinational companies. So, and this is an opportunity for them to meet, to exchange ideas, but equally to meet with policymakers and hear what's happening. So it is around, as I said, it's probably three areas of focus at the moment. One is infrastructure, right, around the world, rolling out infrastructure, making sure, for example, when infrastructure is built, that they respect human rights. They don't dislodge communities unfairly, or they don't sell them a train set, for example, that can't be maintained, or that they can't repay the debt, or it's not viable, right? Or that there's not a quid pro quo on some other influence, right? In the area of responsible business conduct, it's pretty clear that they do look at the human rights in the supply chain or in the construction process. And so that, just to give you a rough idea, and as you said, something like a retailer like Walmart that is around the world, clearly they are concerned about their supply chain. So yeah, that's just to give you some examples of what we do. And also we have some very large fund managers that are members of this network. So clearly investors are concerned as well, right?
Yeah, and one question that comes up all the time, and you sort of touched on this, and it ties to corruption and also blockchain and the cryptocurrencies. Have you seen a sharp rise in corruption or anti-corruption cases since the advent of the cryptocurrencies specifically?
Well,
worried about that continuing to rise as it gains prominence?
Well, you know, it's, you know, it's always been used by the darknet anyway as the currency of favor. But you know, you know, I'm sure you've heard the stories that, you know, enforcement agencies quite like it because it actually is traceable to the individual computers, except if they're outside of the country. So, you know, some agencies obviously use it in actually use it as a way of detecting and actually getting to criminals. So, you know, but clearly making sure the work of the Fraud and Anti-Money Laundering Task Force, or FATF, of making sure that you've got, and a lot of work has happened in terms of making sure that for organized crime, that, you know, the entry and exit points can be detected. No, you know, like your own enforcement agencies I know in the States have made massive strides in this area, whether, you know, a lot of it is actually detection, but also making sure that, you know, with new artificial intelligence and pattern matching, you can actually do a lot in terms of detecting issues here.
Can you elaborate a little bit on that, Greg, in terms of just helping us understand how AI is coming into play in terms from an enforcement mechanism?
Sure.
Because I think that's the first time we're hearing, I mean, we've heard of it in the defense context where DOD is using it, but we haven't heard of Department of Justice or the SEC really utilizing it as an effective enforcement tool. So anything you can shed light on.
I'm not going to tell you what the SEC is doing because that wouldn't be appropriate, but
right.
But generally, more advanced regulators in advanced markets have been using machine learning and AI for a number of years. Okay. And for example, if you're looking at, say, an insider trading case and you're trying to sort of work out if essentially you know the person who had the information, but you can't see the connection necessarily with the person that that did the trade, right? This is always a problem in insider trading. Okay, so and often that was like, you know, looking for a needle in a haystack in times gone by. But with basically with machine learning and AI, you can actually then often these days you can use pattern detection to go, well, hold on, there's a pattern here that A knows B, B knows C, C knows E, and then you can actually say, well, hold on, I saw an actual connection that was made between A to B to C to D at that time. And sometimes that sort of thing would have taken months before. You can now do it within a couple of hours using machine learning and AI. So pattern detection is pretty attractive. But even in things like corruption in supply chains, you know, detecting patterns, whether it's, you know, looking at bank records or whatever, the beauty of it is the speed to do things. For example, in running cases now using machine learning in the area of discovery, which is now accepted by a lot of courts, has saved a huge amount of time on enforcement actually, and avoided potentially leaving out documents that perhaps may have been missed out on enforcement previously. That just gives you an idea. But read this year's Banking and Finance Outlook.
Will do. A little bit more on the ESG piece would be helpful because we've seen a debate in the US around there's no uniform standards, and the SEC, at least under the Trump administration, was leery to sort of step into the fold and try to regulate or create standards. Where does the OECD fall in on that debate? And do you, if you haven't already, do you plan to come and issue a policy piece on that, sort of creating uniform standards and guidance around how to measure all of those separate factors?
Yeah, look, we
figuring out materiality.
Yeah, we did lodge a submission with the International Financial Standards Body at the end of last year, IFRS, who are looking at trying to create a global set of standards. And so we've sort of said, yes, we need a global taxonomy, data taxonomy. Let's talk about data. We've said that that is something that's needed. At the moment, you know, it's a very confusing and very fragmented place. You have, it reminds me of that film, Monty Python Life of Brian, where you've got so many different actors and everyone's claiming to want to do the same thing, but so it is quite confusing. So for example, a lot of people will discuss about sustainability in one room, and you have the people who are investors who are actually worried about financial materiality, which is, effect on long-term, long-term risk-adjusted return. They're concerned that there's something in the ESG risk that's going to affect their long-term return. And, that's probably a 100 trillion market, right? So that's a big one. And then the second one is if you want, is materiality, the impact on people and planet, which is if you want, the broader environmental materiality, which is equally important. But you probably need two data points. You need both, right? Because also the second one, what is financially material will move over time, because the community may go, well, not about you, but we're not going to buy your stock because you're doing this stuff to the environment, even though you don't think so. The two data points are quite important, but often you'll get communities trying to, if you want, conflate the two. They're different, and you need two data points. So that's an example in this area. But I'm hoping we can do something, but I'm not that optimistic, but I'm an optimist at heart. So we haven't still got to two global accounting standards yet. We still have US GAAP and we have IFRS. So and that's taken, I think they were trying to get together 20 years ago. So but I do think we need a global standard, because otherwise, if you don't have a global standard, then basically what you get is arbitrage and inconsistency, etc. So yes, we are very interested in this, but we want to get action. And I think the way to start is to be baby steps. Maybe we agree on, we agree on 20 data points on E, S, and G, and we get that right, and we go there. But I think we've got to be baby steps and get the E and the S and the G, and agree at least to start with. And then equally, one of the things that we've suggested is that we need something like a data repository, so that there is a trusted body like OECD, who data is our DNA, that could house that data and could be accessible to the world. So that's something we think people need to think about. So, but it is, everyone's talking about it. But sadly, people who invest in ESG funds, at the end of the day, frankly, it's sometimes, I think, almost near blind faith. And I guess I'm just more a person who likes things to get verified.
Well, and to that point around investor confidence, I mean, recently you were cited in one of the major newspapers around the GameStop controversy. Can you elaborate a little bit on that, on what you see? Because there seems to be, just like there's a lot of hype potentially in ESG, there seems to be a lot of hype in short sales, and just curious in terms of what you plan on doing at the OECD level around some of these issues.
So, we're not looking specifically at GameStop, because that's for our member regulators. That's what they do, right? We may discuss it in the Financial Markets Committee and, compare notes, etc., and they'll go off and, so just to put a caveat on that. But, the thing about markets and the DNA of financial market regulators is really, as I said in that article, two things. One is to make sure that markets are fair, orderly, and transparent. They're very important terms. And secondly, that investors have trust and confidence. Okay, they're the two key. Of all the market regulators around the world, they're the two key things. So, GameStop, clearly what the SEC is, the first port of call is to make sure that there wasn't market manipulation present, because that affects those two principles, right? And then, but the issue with high frequency trading has always been an issue. As a regulator, basically, high frequency trading does not add liquidity. It actually adds no value whatsoever. It basically, it only trades in liquid stocks, right? And it has to be balanced at the end of the day. So, it really is just sort of a attachment to the market, and it tends to betray true liquidity because it inflates it. So it's something of a leech on market liquidity, actually. But the view I've always had is, look, as long as it doesn't affect fundamental investor confidence, then it's okay. I think the issue with GameStop that is a little bit, could become an issue, is that you do have, social media allows democratization of the market and like class actions. I think that's a good thing, okay? But we've got to be careful that we're not dealing with democratization of risk, that the risk is actually sitting with investors who frankly may have no idea what is actually going on because they're being manipulated. So and that comes back to trust and confidence in markets. So I think we'll see. We should wait to see what the SEC's investigations show up, and I've no doubt, you know, Gary Gensler there, who is a good friend. I'm sure he's going to. I'm sure that he's going to stir things up.
Right. We've gotten two questions from our audience, both related to China and the OECD's relationship with China and Russia. Can you elaborate? I know they're distinct and unique places, but anything you can elaborate on would be helpful.
So, you know, we engage with both countries where I guess there's common interest. Okay, so you know, Russia is involved in our anti-corruption committee, for example. They have an interest in dealing with corruption, clearly. China's not a member, but we engage with them, for example. So, you know, the engagement with countries like Russia and China are about mutuality. And as you probably know, Russia nearly became a member a number of years ago. And they were big financiers of our work in financial literacy, for example, in my directorate. So we work with them again in corporate governance. So it's about where, if you want, there's a mutuality and an engagement. So, for example, we work in China in responsible business conduct, and again, we have to be careful. But you know, trying to you know, what we work with them in different supply chains, and clearly, it's a very controversial thing. We've just got to be very careful. But you know, they are one of the world's largest economies, and we do. We do engage with them, but carefully, with both actually. So, and you know, the key point I made earlier is that the OECD is for like-minded countries. Now, that like-mindedness may not extend to being full members, but it may extend to certain parts of what we do, but not everything. And that, you know, that's quite important.
Another relationship question has to do with your how do you on your face or coordinate with World Bank, ICC, and any other international financial bodies?
Oh, ICC is pretty easy because it's based in Paris and it's run by an Australian, so that is pretty easy. But yeah, no, ICC, in fairness, clearly we engage a lot with ICC. We've worked with them on discussions on COVID and vaccine rollout and various issues we had to do with COVID, with providing, you know, how governments provide business assistance to SMEs, where they have a lot of role to do with SMEs. On World Bank, again, World Bank actually sit on many of our committees, okay? IMF sit on many of our committees. I still sit on the Financial Stability Board, on the Standing Committee on Risk and Vulnerabilities, my directorate on other FSB committees. So the World Bank, you know, we work a lot in anti-corruption with World Bank as well. They use our peer assessments, their own approach on that. So look, you know, we're in constant dialogue with IMF, World Bank, IOSCO, all the other international organizations we work together with. And you know, the international organization world is, you know, it's almost like, you know, if somebody occupies a space, you go, oh, well done. I'll move on and do something else. It's not, you know, it's not, there's not hard borders, right? You know, we're working on blockchain. You know, the IMF and World Bank are working on blockchain. We talk together and we work together. So it is trying to move the thing forward to help. And also we have different markets, like you know, the World Bank is very truly global, right? A lot of their work is focused on developing economies, as is sort of the IMF as well, to a certain extent. So.
Great. We have a question from our chair asking, you guys are doing a lot of work on digital tax service policy. That governs who would be authorized to tax digital service revenues for especially the tech giants. Given that the marketplace has been developing for years, is it feasible to propose and have adoption for a taxing protocol so late in the game?
Well, you know, if we want to keep, if we, you know, the key on this is that, no, I can't really talk because it's not my directorate, so it's my colleague Pascal Saint-Amand. Look, you know, we did great work on the exchange of data, and obviously the US Treasury recovered a lot of money. On digital tax, it's much harder, and you know, the discussion about a global minimum digital tax, there's, you know, the two pillars that they have. But one of the big issues is back to why we exist is that if you don't have a sort of a multilateral approach to this, what you end up is a whole lot of fragmentation where countries do their own thing and they impose their own taxes, and it becomes a mess. And clearly it's a really important policy priority because clearly the digital economy is, as we know, it's just how we do things now, right? So it's not like a little sector, it's a massive sector and it's going bigger and bigger. So you either have a fragmented approach that is inconsistent, or you come to some sort of multilateral agreement to say, right, here's how we're going to do it. Let's have a level playing field. Let's not compete on tax, right? And that's not easy, right? And then the discussions have been going on for years, but I think we've got new optimism that, with new administration, that hopefully we can move forward, right? Because otherwise, the other option is fragmentation and inconsistency, and that's not good probably for a level playing field in global commerce.
Great. Next question is from our Vice Chair, asking about, with increasing portions of investment in developing economies taking the form of debt, how do we ensure that local populations actually enjoy a reasonable share of the output of their growth?
It's a very good question. That's where I actually was involved with the United Nations. Actually, was this whole issue of debt and debt restructuring. So there it's a real problem. It's a problem because the issue with COVID and fiscal debt borrowing, for many countries, they're already especially the if you want the lower income countries, they're already struggling to pay what they've got, right? And they've been given a bit of, as you know, with the G20, they've been given a temporary reprieve in terms of repayments, etc. And then for the middle income countries, that have big tourism, etc., I mean, they've been badly affected. So, the problem here is it's not really just enough to say, well, we'll give you it's a bit like a mortgage, basically. We'll give you time to repay, but we'll just load some more on top, right? And some of these countries, basically loading more on top ain't necessarily going to solve the problem. So, there is going to have to be, it's a bit like the private sector at some point, like the United States provided the paycheck program. They provided that, the loans were forgivable. Well, basically you probably got to start thinking about how you can do forgivable debt and perhaps attach conditions to it related to whether it be human rights or sustainability or whatever. Because countries are going to, there's some countries, the United States can clearly afford it, but there's some countries that really are raising debt to get through, but it's going to have to be a problem. I predict that the next crisis will be a debt crisis, in both public and private debt, frankly. That's probably I expect that will, that's the history of the world, right? We go from one, we usually plant the seeds of the next crisis and solving this crisis. And I think we are planting the seed, but we need to do what we're doing at the moment because we need to, people need support. But at some point we are going to have to sort out this problem in public and in emerging markets. It's clearly something that is going to have to be sorted out. And I think it is what policymakers are looking at now, especially the Financial Stability Board, right?
And another question regarding taxation of NGOs. Have you? I know there was in the 1960s and 70s. I guess there was there was a lot of discussion around that. Now with a more focal and effective sector, how is the OECD playing a more robust role these days in trying to convince governments to, I guess, stop favorable treatment for NGOs?
Well, having been on the board of NGOs, was it Section 3A, whatever it's called, having been on one, or I am on one now. Look, I think the issue with NGOs is to make sure that, the money's, I think the whole public, I can't really comment on what we're doing because I don't know, but my own experience is that the thing to watch with NGOs is to make sure that the amount of monies that are going to administration is pretty tightly controlled, and that there's an efficiency, and that the donors can be comfortable that the money is going to the beneficiaries that the the NGO was established to do. And I think that's the focus of the certainly of the US tax legislation does focus on making sure that, you know, I think they put a limit of 20 or 30% on administration. I'd say my own view is that that's, you know, making sure that there's proper accountability and governance is the thing they should be focused on. Because let's face it, NGOs do work that probably, if they weren't doing it, basically governments would have to step in. So it's an interesting debate. Do you it's going to end up with more government money happening one way or another? Some of these issues need money to be spent on it, and I think particularly the United States, the philanthropy sector, I think, does a phenomenal job, frankly. So that's my own view.
Two final questions, Greg. The first one has to do with governance regime of the OECD itself. You know, how are they approved? How are they directed? You know, for example, given the building blocks mentioned of democracy and rule of law, could Turkey or Hungary, for example, influence the organization's activities or definitions?
Well, Turkey and Hungary are members. They get a vote like everybody else. They get peer reviewed like everybody else. You know, one of the issues with the OECD is that, like all organizations, getting in is very tough to get in, because you've got to sign up to the 27 standards, like some of the ones I've mentioned today. And, you know, I think it's constant battle. We equally, you know, we want to have more countries being members, but at the same time, you know, those that probably sign up and probably, you know, where perhaps there are issues, we've got to try and work through them. And to be honest, often peer pressure is quite important, because really at the end of the day, it's really soft law, right? A country is a sovereign jurisdiction. Peer pressure is quite important in terms of when people come in, but it is an issue, and I think it's one that many international organizations often have to try and manage, frankly. So I don't think there's a very easy solution on this. So, but you know, every country has an ambassador, and they equally on the front line. You know, if somebody's not doing the right thing, probably I'm sure their fellow ambassadors probably keeping an eye on them. Plus the member committees, that there's people from so many different ministries are involved at the OECD, whether it be justice or tax or market regulation, treasury, health. I mean, you have a lot of government ministries are involved in all the relevant specific disciplines of OECD.
Greg, what can we do as U.S. citizens to help you and your colleagues in your mission in terms of getting the word out and helping promote the OECD's research and great body of work? I mean, it's extremely impressive, the amount of work that you produce as an organization. Is there anything we should be doing as citizens to help educate our federal representatives or encourage them to take the organization, you know, or is there no work to be done on that front?
Oh, no, I think there is. I mean, I think, you know, we advise governments, right? Our clients are governments, but I think often the community, you know, the community, when you're watching the news, they say according to OECD statistics, that's most ordinary people's link with the OECD. You know, I'd encourage people to go to a website, because the wealth of research and data, it's amazing. The access to what we do is quite incredible, whether it be on anything, right? On healthcare and what we're doing on COVID passports at the moment, for example. So, you know, and encourage people to look at our website and talk about what we do. And there's a lot of, whenever, I guess our objective is to be a reference point for policymakers, but that doesn't mean to say we can't be a reference point for anybody in the world, any individual company, whatever, because a lot of what we do is relevant and a reference point. If you're having a debate about something, probably OECD's got a position on it.
Right. Well, thank you.
Yeah,
good.
Thank you so much, Mr. Medcraft, and to Tom and Frank for bringing us this program today. Some great information, as well as I found it intriguing what our audience was asking. So thank you for being with us and bringing your expertise to us. Our next speaker event is on Wednesday, March 17th at 5:30 p.m. We will be hosting William Cohen, former Secretary General of the Basel Committee on Banking Supervision. Thank you all again for joining us today. And as always, you can send any feedback you have on our programs to me at info@worldaffairsforum.org. I wish everybody a wonderful afternoon, and to Mr. Medcraft, who's in Paris, a good evening. Thank you,
Wendy, and thank you, Frank, and to Tom. Thank you, and thank you, everyone. Please go to our website.
Indeed.
Take care. Thank you.
Thank you so much.
Thank you.
Ciao. Bye.
Ciao.